Good evening. Welcome to Options Center. We are checking out a live stream. This is the first time I've done this, so let's see how it goes. It is Friday. It's going to be a long weekend, extended weekend, 3 days, so expect that if you're closing out or putting on any trades today. I just want to go through a few things from my usual stance, and that's the SPX on multiple time frames, starting off with the max information that we can get on the monthly time frame. And after that, we're going to go down to multiple time frames, down to the daily. Then we're going to check out quite a few different charts, just to kind of show you that we perhaps, and my best guess is that we are topping out. Okay, we're looking for a top right now, and I'll show you the alternative as well. So first, we're going to start off with SPX on the monthly time frame. The SPX, if you're new to trading, if you're new here, is the market in itself. It's the cash market. So we're looking on a monthly time frame. Notice this last leg right here. We're considering this the end of a major top here. Okay, we're going to go back to the Great Depression in 1930. We're topped off there. We draw a trend line to the top, and we hit that top again. Okay, so just in a nutshell, we're looking for some sort of major top. Doesn't mean it has to be the top of the end of all ends, Armageddon kind of thing, but we're getting up there. We should have a pretty big correction, and it's been for this time frame, it hasn't been big at all. For if you get in much closer, yeah, it feels like it's been a large correction here. So we have what we had in this channel ending at the top of the channel, right where that trend line ends, and another channel top there. So we reject it off of there, and this is a possible wave 5. If this is a wave 5, then we're looking for a minimum of a 3-wave correction. Okay, and that would mean this is probably an A, B, and moving down to C, or a 1, 2. Now we're right in the range where it really matters if we go up further. Okay, so we're pushing the bears to the limit at this point, and we are giving the bulls a chance to just get in fully, and we're resetting the oscillators. All the stuff's happening to where we're kind of in a neutral zone at this point. Now I in the past, probably over a year, we've been in this area here. We're breaking out from it, and what's going to happen, in my opinion, is that we're going to retest that area to make sure that that breakout was legit. Now when we do that, I think as soon as next week, and I'll show you why down the lower time frames. But just to put it out there, the bullish alternative to what I'm talking about, I don't think this is a wave 4, so I'm not looking for any real triangle, real flat, anything like that. Sideways consolidation, it's possible, but that would be my third alternative, excuse me. So, well, if we're looking for the bullish point of view, I think this is going to be an ending diagonal to end this major top and then head down to a higher degree wave 4 or possibly 2. So after this wave 3 down to 4, now we can look at this as for the bulls, a 1, a 3-wave move for an ending diagonal, which would be a 1, 3-wave move down for a 2, 3-wave move up, which this should be pretty relentless, and it has been so far. We should start making higher highs and higher lows on top of previous resistances and whatnot, and we should never we shouldn't come back below this 8 EMA or 20-month moving average. So you should see this grind to the upside to make another high for a 3-wave move up for wave 3, 3-wave move down for 4, and finally topping off with a 3-wave move up for 5. That's an ending diagonal. So if you're not familiar, it's going to be important in the 65-minute chart when I get to that later on, that you understand what an ending diagonal is again, because I think that we did it again. It's pretty common. So this pattern, let's see, wave 1, it's an impulsive wave, but this, for the ending diagonal, is going to be 3 waves up rather than 5. And 3 waves to the downside for wave 2, 3 waves up. This wave 3 cannot be the smallest, so they're shortest. So this wave 1 is pretty massive, okay? So I would suspect the wave 3 is actually smaller than wave 1, but wave 5 should be smaller than wave 3. So we should be contracting and showing a slowdown in momentum. Okay, so this isn't exactly proportionate, but should be something like that, where this is really long and really a little bit shorter, and it's shorter at that. So that should be our ending diagonal. The waves can overlap. So you have the top of wave 1 here. Wave 4 can overlap wave 1, where typically that's not the case, but in ending diagonal that can be the case. Okay, so let's move over to this MACD. You have the MACD looking to make a crossover here, a bullish crossover. We don't have anything. We need to close above on this, in this area, this monthly candle, to have a green area on this histogram show that we have a cross. The histogram is showing that this leader line, I do have a MACD video if you want to learn about it, if you're not familiar, but the yellow leading line is crossing over the MACD blue line, the moving average. Okay, and once it starts crossing over, you'll see a green histogram over there, or not, or if it gets rejected, but we have to close out the month strong. Okay, and if you notice the RSI, the relative strength index, you notice in a bullish market that it stays above that 50 dashed line. Well, it's doing it again, it's bouncing off of it, so we're getting a reaction, and the key is here, are we going to break down below it and just make a lower high and look more like this 2008 correction here and start correcting underneath? That's what we're looking for. But if we get the bullish scenario to where we make new highs, then we should get that bullish crossover, but we're not going to make new highs on the MACD or the RSI. That's why I drew these lines out a little bit. We're going to get what's called a bearish divergence, where price is making new highs and the indicators are not, that they're making lower highs. That's the divergence. It should happen twice, which is called a 3-peak indicator. It's a 3-peak, which means 1, 2, 3 peaks, lower highs, lower lows, and up here the price making higher highs and higher lows. All right, now let's go down to the weekly time frame. All right, on the weekly time frame we have a possible wave 4 here to 5, and we're making this channel. We broke out of the channel, back tested, and breaking up here. Now notice we have our dashed line from the top of that wave 4. Okay, this could be, I know it's such a high time frame, this can be adjusted a little bit to touch this top as well. So you see the weekly time frame, we're getting right onto this dashed area. It's going to be a zone. It's not exactly, you know, the exact spot there, but we're getting into that zone. So this is a big deal that we could be rejecting off of this area. We're getting into this area. We have a nice large candle here, and what I suspect, oh, all right. Well, that concludes our session here in Thinkorswim. So that's happened to me one other time. Not on a live though, because I haven't done a live yet. So anyway, we're getting right to the zone where we should see a topping candle. So that's why I'm saying that into next week we should see some sort of topping candle or some sort of formation. So I don't I don't suspect that we will, into next week, that we will have a huge decline. That's possible, but with the shortened week, we perhaps break above this this dash line and then pull back to be rejected off it and give us some sort of reversal candle on the weekly. So I'm not going to be real aggressive on the weekly options unless we get that move above, and then I'll be looking to fade that move on shorter duration options. Now, after breaking this, we have higher highs, higher lows. So we're making this move here, right? So I do think we're gonna recheck this this breakout area in this zone right here in this 4100 area is going to be very crucial to holding up this bull thesis here. Okay, we break down from that, and I think we start heading lower. This is also that box that we were talking about that we broke out from this. So this is a breakout zone. We start breaking back underneath it, and it's going to be a fake break, and we head much lower. Okay, we bounced off of that 50% retracement from this bottom area here, so up to the top, and we made a 50% retracement. So that kind of validates that ending diagonal. If that's what's going to happen, the ending diagonal, they typically don't go really deep. It's possible, but 50% is shallow enough, and then it continues to grind to the upside, 50% back, and then to the upside to finish. Okay, another indicator, the MACD, we have this downtrend line. We're getting right into that downtrend line. Just happens that we're coinciding with that area here, so we're coming into some confluence, okay? Same thing with the RSI. And then let's go ahead and move to the daily. On the daily time frame, trend is our friend. Now, this is also lower highs, lower lows. We're starting to make higher highs here, but what's happening here, we do have a possible topping candle that's forming here today, but I would take that with a grain of salt with that weekly, just being like that. So we could top here, and we could get maybe a cloud cover on that weekly or something like that. So it's possible. Let's just look at all different time frames, and we have this this rising wedge that we're just kind of peaking. Could be a throw over. We get back under it, and I think we start moving to the downside. This one, I don't want to look at this chart too much. Let's take off. We're not really worried about the oscillators right now. So let's go ahead and look at one of the main indicators that says, hey, why don't you think we're in a new bull market? Why don't you think we're going to move much further? Well, let's take off these indicators that we have below, the RSI, MACD, and let's put on the McCullen summation index. I'm not worried about the oscillator right now. The summation index is a product put together of multiple oscillators. The McCullen oscillators put together as a indicator in itself. So it's kind of like a moving average of those. Okay, so looking at price action, moving up, we kind of top right here, right? So we made this, which I think is a wave A going down to wave B. We top right here, and that's the same top as on this indicator. Okay, this shows the breadth of the market. And then we had a pullback, and that nice large move to right into this topping area. This is a breakdown candle high. We're kind of right into that area. So we do have a little bit of a zone. Let me extend this resistance that I had a long time ago. And so that kind of says, hey, you have a little bit of room to move to the upside, and that could happen next week. That could be that opportunity that we have to short next week. And then, so we're making these higher highs with this wedge here, but look at these lower highs into this pivot. I call this the bull bear pivot at the 1600, because that's where things start to change. But we're making this lower highs, a lower high here, a lower high here, and to me that's extremely weak to think that we're going to go into some sort of new bull market or even make new highs at this point. This does not say so. So this is super important to me. There's other indicators that could help you out, but that one is my main indicator at this point. Okay, so that's what I want to show you there. Now let's go over to the Elliott wave. Here's what I got going on here. So from the top, we have a possible A, B, C. C being that equals A from the top of B. If this were the case, this is a conservative look. If we are to correct further, so I'm going to assume that we topped right now. So this is the indicator that you have. It's an extension indicator. If you go into tools, let me get that back out of here. Sorry, I'm lagging a little bit. If you go into the extension tools, if you add a drawing, and this is the extension tool, you could have it on TradingView or Thinkorswim. I use that tool and start from the top to the bottom, which would be wave A, and then the middle point would be the top of B. If this were to be the top, it might have to extend up to the 786 if we get there into next week. And then if it were topped out right now, the 100% would be right around this 3100 area. So that's something to look at. Don't look at these numbers. They're not placed in the right spots at this point. We did think that we topped out much earlier, but after we extended, we got to change these numbers out. And so what I'm looking at is that we're almost at the end of wave B. You have this larger A, this larger B, and we're looking for C to end somewhere down here. If it's a C, if it extends much lower, then it's probably a wave 3. And then we have, it's kind of an uh-oh situation at that point. And that's the bearish scenarios. If we're looking for something a little bit more bullish, any pullback that we have, we're just going to see if it's a 3-wave or 5-wave move. Okay, down for an A, and then a 3-wave move up for a B, and then what I think a 5-wave move should complete it for a C. Okay, we're right at that 50% retracement, and we're just about ready to tag. If it gets there, doesn't need to get there, but if it does into next week, we're looking at that 267 area here, and all that is a 100% move. When A equals C, that would be the target there at 267. So that's just symmetry where A corrects into B and then has a 100% move into wave C, and then you could see the correction after that much into new lows. Now if Tesla is super strong for some reason, this could be a 1-2-1-2 pattern and then heading higher, but we'll have to see what the market does overall, because this right now is only a 3-wave move. And if you break underneath this bottom here, 153 area, then that's confirmed that that is just a correction, and we should be heading lower from there. And last but not least, let's just look at NVIDIA. Just insane moves here. We had our correction, and this could be, I mean, you look at this and you have the top here of a large channel. This could be an expanded flat, and we head much lower to head towards the bottom of the channel. That would be your super bearish scenario around the $70 range, where it's an expanded. Or we just had an end here, 1, 2, 3, 4, wave 5, to end off this move. Or in a much more bullish scenario, let me go to the Elliott wave. Much more bullish scenario is that this is all wave 1, and then we only pull back for a wave 2, and then we go much higher. So it's really hard to tell, but we're getting into all these zones here where a possible top should be on these extensions. Okay, that 444, and then even higher, there's one more up there. It's around that 500. Yeah, about 500, 490 zone there would be the next area after 444. Okay, and that's pretty much, let's go to ES on the 65-minute, and we'll end off there. Kind of show you what we talked about earlier with the ending diagonal, how important it is. And this will basically just show you, you know, what we have going on here for the Elliott wave count. And if we pull back, let me just pull back a little bit. Let me go to the 4 hour. So we had our move here where I said we're WXY or possible ABC. And I have this counted as a ABC, where this is the wave 5. So you have 3-wave move here, 3-wave move down, and we're looking for an impulsive 5-wave move, which is this is a 1, 2, 3, wave 4 into this triangle, and now we're looking at a ending diagonal here. What does that mean?